Good morning and welcome to everyone joining us for this Cleva webinar. The topic of today's session is the danger of mixing client funds. It's an incredibly important topic, one that's relevant to almost everyone in the care sector. First of all, let's do some intros. I am Tom Bishop, the Chief Commercial Officer at Cleva. I've been involved with Cleva since day one, while we were building Cleva, but also while we're running Cleva. Time and time again, the topic of money comes up. It's fair to say that no one gets into care in order to manage a client's financial affairs, but increasingly that's what we're being asked to do. It's vitally important that we manage clients' funds in a very safe, protected, compliant way.
Thank you, Tom. Good morning, everyone. My name's Aidan McAllister. I head up our care partnerships within Clever Card. I've got pretty much a 25-year background of working within the social care and within the residential care space.
Good morning, everybody. Sarah King. I've been working with Clever now for 2 years. Prior to that, I used to work for the Home Care Association, so been within the sector for well over coming up to 23, 24 years.
Sarah, thanks very much for joining us. Welcome to our guest speakers.
Good morning, everyone. My name's Derek Bringen. I am a career banker. I've worked in health and social care funding and customer relationships for over 20 years, and I work for Virgin Money, and I run the team across the UK supporting health and social care businesses.
I'm Catherine McDougall. I'm one of the directors in the Virgin Money Health and Social Care team, based in Scotland, but covering most of the UK. So thank you for having me along.
Morning, everyone. I'm Emily. I am a specialist auto protection solicitor. I've been practicing now for 25 years. I'm also the founder of Enable, which is a specialist attorney and deputyship service supporting clients throughout the South East.
And finally, I'd like to draw your attention to the disclaimer at the bottom of the screen, please. We're talking about finance today, but please obtain independent professional advice before relying on anything we discuss today. So our discussion topic of the day is client funds and the dangers of mixing them. Aidan, I'm going to come to you first, please, for help with some basics. What do we mean when we talk about client funds?
So client funds really are any monies, however small or however large, which a care or supported living provider is managing or helping to manage on behalf of their clients, or indeed they're holding those monies for their clients. So typically supported living providers, will be tasked in helping them manage personal finances, budgeting, paying bills, paying for food, their shopping money. They may be deputy, they may be appointee, they may be not. But essentially those funds are sat in that care provider's bank account, and so they have the responsibility to help the client. There's a real variety of sources for the funds, which we'll probably come on to, Tom, but they could be anything from personal monies right through to budgets from the NHS.
Got it. Excellent. Okay, thanks, Aidan. Okay, let's move straight on to that one. In that case, where do these client funds come from?
Sometimes there's a perception that people who are in receipt of social care or in supported living are, don't really have any money. That's not the truth. We work with a number of local authorities where their deputy team are managing the funds of some quite wealthy people, but they're managing them as deputy because that person is vulnerable, and so the financial deputy is stepping in at that point. So those funds, they could just come from personal savings and investment that person has built up over their lives. It could be their personal funds from their bank account, which are fed into the care provider to pay for certain things. It could be disability grants, which that person may need to pay for vehicles, adapted wheelchairs, all sorts of things, and the care provider is helping them in managing that. Disability benefits, which are due, could come in via the care provider. You could be sending your gran £50. That's an ad hoc fund that you're sending in, but you're sending it to the care provider. So you're sending it, hopefully not 50 quid in an envelope, although that happens, but you're sending it to their bank account. Could be pensions, could be wages. There's a number of supported living providers who are allied with social enterprises where those people work within that facility. So they get wages, and that's managed by that organisation. And of course, there's DWP benefits and sort of institutional benefits that people are due as well. So it's a real mix, Tom.
Thanks, Aidan. So coming from a huge variety of sources, who owns these? Is it the property of the care provider, or are these funds owned by the vulnerable user in question?
The responsibility of the care provider is key, because it is a big responsibility. They've got a safeguarding duty to their clients in terms of their physical well-being, their emotional well-being, their medical care. They've also got a safeguarding responsibility to their staff. And when it comes to handling a client's finances, whether it's allocating 5 or 10 quid to go to the shop, or whether it's managing much bigger payments, if they're not managing that properly, there's an issue that affects the client, affects the client's family, also affects the staff, because accusations are rife if money goes missing, and it's just an unfortunate fact of life. There's obviously a legal responsibility to make sure that there's visibility around where those funds are at any one given time, what has been spent, who spent it, what it's been spent on. So an audit trail, which is easier said than done, as I'm sure some of the providers on this call will know. And there's also an area around the autonomy of the client. So that money, those funds that we've just spoken about, regardless of the capacity of the client, that's their money. So if you're in a supported living environment where you've got people perhaps with learning disabilities, physical disabilities, part of your role is to make sure that they are getting out, spending money, interacting, and they have the right to choose what they're going to spend on. They have your arm around their shoulder, as they do with their deputy. That money is theirs, and it's for them to spend, and for us to help them to do it safely.
We know what client funds are. We know they come from a very, very wide range of sources, and we know what we're supposed to do with them, and we know, crucially, that the funds are the client's funds, and they belong to the clients. Even if they're being managed or monitored by someone else, the monies are still the property of clients we're looking after. We have a bit of an interactive poll for the audience, please. What funds does your organisation manage on behalf of clients? Certainly, the big three there are client funds, donations, and government funding, which is kind of, I think, what we'd expect, and the largest sources of funds, and the most common sources of funds for vulnerable users. So the topic of today is the dangers of mixing client funds. What do we mean when we say mixing?
There's two elements, really. If you have money paid into your care business's bank account or your care provider's bank account from more than one source for more than one person, you've essentially got mixed funds. So you might have a home that's got 10 people with learning disabilities, or you could be providing a residential care provision for elderly people, which may have 10 people. The slide we just saw with all those different sources of funds, they're all going to be receiving one or more of those types of payment. We're seeing those all come into one business bank account. So those funds are mixed. They're also mixed, as we've learned through our sort of journey with Cleva, when it comes down to the spending money. So we'll talk later on about how the care industry has progressed in certain elements around technology, but we quite often see, when it comes to 10 residents spending money, we see a tin with 10 envelopes in with 10 lots of cash. So that money essentially is mixed as well. It's not very well managed, but the key thing is where money is being paid into that account on behalf of more than one person, and it's sat there. That's then mixed funds.
Many care providers do it not deliberately, but unthinkingly. I've got money coming in, we'll pop it in the business account. Derek, are there risks associated with mixing these client funds?
Well, yes, there are, and it's been an issue that's been evident in the industry for many years, but it would have been not uncommon to see a care provider mixing literally the residents' funds under the name of the business itself. So commonly you would see Bottle Care Home business account and Bottle Care Home residence account, and the funds would be placed into that account. However, there'd be no definition that that was specific to one resident or 30 residents, and ultimately it is in the name of the business itself, which means that the ownership of those funds is actually then deemed to be that of the business. Now, if that business should enter into financial difficulties, those funds, unfortunately, would be classified as the business's funds, because the audit trail does not indicate anything other. So therefore, those funds would be at risk if that business should be in financial difficulty. And ultimately, if that business was to fail, those funds would be scooped up into the administration process if that's where the business ended up. So the unravelling of that and the identification of those funds to the ultimate original beneficiary would be very difficult.
I can absolutely absolutely see that. Yeah, that's a really, really good point. So we can see significant risks there, particularly around the area of administration. If a organisation goes into administration. Emily, I'd like to bring you in here, please. What happens when these funds get mixed? What legal challenges are there? What ethical challenges are there?
I think Derek's touched on the kind of insolvency side of it, which obviously is a legal issue. If the company were to be insolvent, then you've got issues there about identifying the client funds, unravelling it all, particularly where there's been poor record keeping, which in my experience, where someone is intermingling client funds, there's also poor record keeping with that. So that's going to be an issue. You've got the more serious offences under the criminal law. You've got fraud, you've got coercive controlling behaviour, you've got theft, things like that are much more severe and carry serious consequences for the person or personnel involved. And as a company, you can also be liable for criminal offences. So it's not just the person that may have mismanaged funds. You've also then got issues in relation to CQC. So if you are regulated and you are mismanaging client funds, then that's going to be an issue there too. So there's lots of consequences for getting this wrong. And in my experience, a lot of the accusations will come in where the client can't recall what's happened and they're not able to give clear instructions. So that's where you've got this mixing, and I'm sure we'll talk later about what we can do to put steps in place to avoid these things from happening. But yeah, there's lots of consequences.
No kidding. Yeah, absolutely. I'm sure when you mentioned criminal responsibility there, chills went down the spine of everyone on the call. Okay, so Derek, Emily, thank you so much. So we've seen that there are some very high risks here. We've seen there are some significant legal consequences that come from here, ethical consequences, and also, of course, as Emily touched on there, CQC challenges that come with this as well. When your organisation manages client funds, how much time, roughly, do you spend managing client funds per client per month? Gosh, okay, so you can see there, people are spending, only a handful responding to this has said they spend less than 30 minutes per client per month. Everyone else spends at least 30 minutes, and a quarter of respondents, and they spend more than 2 hours. This is a significant time sink or time drain on your business. And as we touched on at the start, probably not one you thought you were getting into when you got into the care sector. So we've talked about the consequences and the risks of mixing those client funds. Catherine, thank you for joining us. Hopefully you can hear us and we can hear you.
An interesting topic, one that's fraught with difficulties. So I want to explain where the difficulties lie from the banking sector, and it all comes down to the definition of client funds and the regulations that involved around that, and how that links into money laundering regulations set out by the FCA. So it's identifying the individuals, an ability to do that, especially when you have lots of small amounts, and possibly residents changing quite frequently, and keeping track of that. So what tends to be the position is that from a formal client firm, client account, bank account that you would see for a solicitor or an accountant, these are only available for FCA regulated entities because they are tied to the same money laundering regulations under the FCA, and that delegates that responsibility to the entity that holds the account. The problem is in care is that step hasn't been formalised or taken. So we have unregulated entities managing client accounts, which means the result tends to be that we can provide a bank account for the legal entity, so the limited company, but these are not formal ring-fenced accounts in the sense that you would see for a solicitor or a accountant. And that's where difficulties come in if there's financial difficulty down the road, comes to a crunch point. But that's where the banking sector has difficulty with finding a resolution or assisting in resolving this issue. And it's to do with these money laundering and identifying individuals. And if the entity themselves isn't regulated, then the bank, that onus falls on the bank. And when you're speaking about vulnerable people, that can be very difficult. And unfortunately, it does come down to, if the computer says no, the workarounds and the options for identity and documenting this becomes difficult.
Yeah, absolutely. I think everyone at some point faced the challenge of trying to formally identify a client to a bank or some other financial institution. These organisations are not set up for vulnerable users. We had one talking to a client the other day. They said the bank said no problem at all. Just ask them to come in with a copy of their passport and their driving license. And of course, the client in question had never left the country and never driven a car. So all these kind of typical ways of identifying ourselves that we're privileged enough to have available to us are not necessarily available to our clients. So that's a huge challenge. So thank you for flagging that one up, Catherine, and something I think that the industry really needs to work on. Also, thank you, Catherine, for identifying the number of, or the breadth of regulations that need to be followed when we're talking about these things. Obviously, we have bits that Emily and Derek touched on before about who's legally responsible, what happens in the event of an insolvency. Bringing in money laundering is a very, very interesting point, and one hopefully if we have a little bit of time towards the end of the day we can touch on a little bit more. There's a load of regulations here, and there are some significant consequences for falling afoul. It's clear, therefore, that every organisation needs a clear set of policies and procedures to manage client funds. Do you have any tips or guidance on how organisations can establish these policies?
Yeah, so obviously written code of practice, that's essential. I agree with what Catherine was saying, and I think we can come across for some people as being quite judgmental, like you shouldn't be doing this, but actually let's look at the realities of the situation. As Catherine points out, sometimes getting a client account opened for a client is virtually impossible because they have no ID. Their residence is different from what's on DWP because they are now in a care home, so you don't have any residential documents for them. DWP take forever to even send you a copy of what their current benefits are. It is a minefield, so I don't want to come across like we are judging people for what they've had to do to make, to give clients money, but there are things you can put in place. So yeah, obviously having a written code of practice, that's really important, and making sure it's on your onboarding process and that staff are regularly trained about it. One thing that I think is really key is around the area of abuse. So making sure that you've got a really clear policy about gifts from clients. Quite often a resident will be wanting to buy something for one of the carers because they can see that they're struggling, or they've talked about a daughter they've got and they want to give the daughter something. Having a really clear policy about that and saying either under no circumstances is it ever appropriate, or small gifts of X are appropriate. But I think having that, the more discretion you've got, the more room there is for blurred lines and for people to think, well, they wanted me to have it. And I think that for me is quite key. Cash, avoid it at all costs if possible. I know for some situations it's not possible, but try and use things like a prepaid card like Cleva, where there's a clear transparency there. You can check what's been done. You can check where the money was spent, what it was spent on. That's really key. Not mixing client money with office money. As Catherine pointed out, as a solicitor, we have very clear rules. We cannot mix client funds. And I think for a lot of care settings, they don't have that system in place. So at least having a separate bank account that is client money only. If you've got to mix client money, if they're all in one pot together, then having a very clear and quick method for identifying which client money is whose, and never overspending on that client. I use Xero. They're really handy for being able to allocate a client name for any money that comes into the account. Therefore, I can see at the tap of a button that client's got X amount in their pot, as it were. I can't overspend. And again, using Cleva for that, if you're going to use Cleva, you can immediately put the funds into their pots. So you know that client's got X amount of money. Then you're not going to spend someone else's money by accident. I think, again, practical points, don't write down a PIN number. If you need if someone says to you, here's my card, I want you to go and get money out for me, that's a real red flag. If it has to happen because that client needs something, don't write down the PIN number. Ideally, take the client with you to the bank so they can access it themselves. If you really can't do that, then I think you've just got to make sure it's a one-off. Don't make this a regular thing where you are taking a client's own current account and PIN number to a bank, it's a real no for me. And I think just being transparent, always having that ability to, if anybody came in and inspected your books, you would know instantly who had what and where. So always think, is this transparent? If someone came in and I had to explain what I've been doing, would I be comfortable that I had everything in place? So those are just some tips that I would say.
That's incredibly helpful, Emily. Thank you so much. Yeah, absolutely. I struggle to remember my PIN sometimes. Certainly, clients with vulnerabilities really struggle with it as well. And that's what, without wanting to plug Cleva too hard, that's one of the things that we thought about quite carefully when we were building Cleva. And that's why we allow, for example, a care provider who has responsibility and authority to spend a client's money to tap a button in the app and view the client's PIN number. I just want to touch, June Ward asked a question earlier on, which is about distributing funds into Cleva wallets and Cleva pots. And June, that's exactly the kind of thing that we're talking about here. So because the money goes into each client's Cleva pot, in each client's Cleva wallet, we call it, that's exactly what we're talking about when we mean that funds are being kept separate. And crucially, as Emily just touched on there, records are kept separate and individual records are kept for every single user. One thing also Emily touched on there is transparency and record keeping. Derek, how important is transparency for these financial matters?
It's absolutely vital for both the resident, the provider, and equally the regulator or anybody who wants to do an audit of the business accounts. I think everybody's talked about the challenges, but some of this is just fundamental basic record keeping. Aside to keeping money separate and identifiable, you are dealing with an individual who's vulnerable. You have their family members potentially in the background. People want to have some audit trail of what has been happening with my mum's money. I agree with Emily, going out with a card and using it in a cash machine is probably not the best way to apply the methodology of looking after a resident's funds. This is a challenge the banks have had for years and how we can address this particular issue. And obviously bank statements and bank card activity is a good way of an audit, but it's being able to do that in an individual's own specific right, which I know Cleva Card can do. That's been the challenge for us. For a provider coming into the bank to open 30 residence accounts, it's just a cumbersome and really difficult thing. Never mind the audit trail we'll ask of that provider to give us so that we can actually open the account in the first place. So that's not only anti-money laundering questionnaire, it's a know your customer questionnaire. It's then going through, do you have the appointeeship documentation, the guardianship documentation? Do you have the power of attorney? Is it welfare? Is it all encompassing? When did it start? Are you the named person on the power of attorney? Is this the actual client specific document? So imagine doing that for every single resident. One of the regulators in the country actually did suggest that was the way that providers should go. But the practicalities of that are just not realistic. And therefore, if they applied that regulation, I think we would have serious problems about residents' funds. So yeah, even if it was a simple spreadsheet on an Excel basis, keeping individual account records is absolutely crucial. But again, it takes up a significant amount of time. And we all make mistakes, don't we? So there's always that potential for error. And sometimes in today's care market, care industry, the fees involved under self-directed support can be quite substantial as well. And therefore that has to be recognised that we're not dealing with small pocket money numbers in a lot of cases here. This is people's well-being, and there has to be some gravitas.
There are some significant numbers here. I mean, sometimes I guess when we're thinking about just supported living, for example, we're thinking about someone dropping off 50 quid for mum's hairdresser or some Christmas presents, but no, you're absolutely right. If we're talking about direct payments, that can be hundreds, thousands of pounds per month that we're expected to look after or at least monitor on behalf of the user. Your point about the audit trail and the record keeping is a very, very good one. It's not dissimilar to giving medicine to a client. If you're responsible for doling out medicine to a client, you maintain meticulous records about every pill that's been given out, every injection that's been administered. And arguably what we're saying, I think, is that financial records are as important, as critical, as regulated as the medical records. Let's bring it from theory to practical experience. Sarah, you've got years of experience in the care sector.
Thanks for that, Don.
So you've got a handful of years of experience in the care sector.
Yeah, I mean, I've been fortunate enough to speak to many providers over the 20 plus years. But one thing I really want to sort of stress is around the stresses and the strains that actually add to the running of the service for the poor provider. Generally, these providers go into care, and they are then thrust into the world of financial regulation and all the other bits that go around that. And I think we've spoken more, particularly over the last couple of years, to people that have spoken with regard to their nervousness around dealing with funds. And only recently, I was speaking to a provider that was actually holding £1 million worth of funds in their bank account that was mixed of operational and client funds. Now you can only imagine this, the sleepless nights that particular provider must be having. Just want to touch on two specific examples, and Emily, it touches on some of the things that you've already spoke about. I was with a provider only recently in one of the London boroughs that was going to an ATM every month to draw out potless amounts of cash to then take to their home to split into the supported living clients' wallets. They were then asking their support workers to go down to a London Borough high street to go and do an errand run with taking the particular cash. And I think one of the things that I really want to stress in my experience is the stresses and strains that actually puts onto the support staff as well as the organisation as a whole. So in terms of financial sort of safeguarding, it's about safeguarding the employer and the employee and the absolute client. So that's all the experience that I've had. It actually adds the stresses and strains to running to a business.
We've got a client who, prior to using Cleva, was asking us care worker to go out with about half a dozen bank cards and take out £100 from each. So they were walking down the high street in London with about 600, 700 quid every week, same time. Every time the care worker and the support worker was asked to do this, it was absolutely terrifying for them. So conveniently, we have a question about cash. Do you manage cash deposits from friends and family for the clients? We can say over half of the people who are on the call today are receiving cash from friends and family. So that's a significant thing that needs to be dealt with. Some of those scenarios that Sarah's just described, where we've got people walking around with huge amounts of cash, could those have been avoided? Could we put better tools, better procedures, better systems in place to avoid those?
Absolutely. I mean, I think also to sort of add to the vulnerability or the safeguarding element of handling that cash is that a lot of supported living residences that I go into, quite often they're in the countryside. And for those people to find a bank now is hard yards. So it's not very efficient to have to go on a 15-mile journey to go and pick up maybe 3-4 grand in cash. Same time each week, word gets out. So, we've obviously been involved in this since we started Cleva. We also have, which we haven't mentioned yet, Tom, the joy of the Siggy run, which we have with one of our end of life residential care providers, where they were sending a staff member out with cash to go and get 28 different packs of cigarettes for the residents. So it was sort of drifts into health and care, but they were at double risk. They had cash going out to the corner store, and then they had lots of lovely cigarettes coming back. So at each element of the journey, they were at risk. So I think with the cash side, you need to try and reduce it. The systems like ours, where you can just instantly see what has been spent, by who, for who, when, where. There's a receipt. If anyone ever complains to your support worker or carer saying, when you take my son out, I know you're getting yourself a sandwich, you can just go, no, we're not. There's the evidence. So it just makes that side of it really efficient. I think on the bigger picture, which Derek was talking about, this bigger money, the big money which is coming into the bank accounts, then I don't think it's avoided, but if I think in 20 years odd, when I was first going into care homes, the medical notes were done on a piece of paper and then transcribed onto an old PC, and it's gone from that to the staff member having an iPad to it now being on an app. Similar with meds, you don't just get a bulk supply now, you get a specific delivery of the meds for the resident in room 216. What doesn't seem to have kept up with that is the development or the management of that money coming into the system. I think people just have to be as efficient as they can, keep their records up to date, look at what is out there, look at your risk. That's the biggest thing. Look at your risk and then work it from there.
Does your organization use a platform for managing client funds? So this is what Aidan was just touching on there. There are all sorts of platforms, including Cleva, that allow you to safely manage client funds, safely manage funds on behalf of vulnerable users. Do you currently use one? Around a half are. We therefore probably assume that about half aren't using a platform to currently manage client funds. Let's continue this line of thinking. What tools, software, resources, platforms are available to manage client funds?
We work with direct payments for thousands of local authority clients. And we look at the technology that they're moving into and thinking, can that work in the care sector? So some of them will have software whereby the monies from the local authority are being almost immediately reappropriated to the care provider via an individual bank account. So it's almost like a virtual account that belongs to one of thousands of clients. So there's always visibility of where that money is, and the payments are then issued immediately for the various recipients of that payment, which could include the client, but essentially in direct payments, it tends to be around the bigger budgets. So we've talked to them, we've talked to other providers as to how that could work within a residential care facility, within a supported living facility. Is that money secured? And that raises lots of questions around, people who are holding large sums of money. Essentially in social care, it really should be a quick journey. It should be the budget there, which is monthly, should come in and be paid. And across all those different elements we saw on the first graph. But what tends to happen, because of workload, because of volume, you could be managing hundreds of residences within your supported living, you could be managing 10. What tends to happen is that money can aggregate and sit there quicker than it needs to be. And if you go back to Derek's point about what happens if that company is in distress, then that money is at risk. You really need systems where the money is going from funder, whether it's DWP, whether it's a personal health budget, and going to the recipient in as expedient way as possible. And we're seeing that now. We're seeing that come in. And I think those products, and we're talking to them, can really work within supported and residential care.
Emily, perhaps final question to you before we turn to audience questions. Where should our audience go if they're struggling with this topic?
Looking at writing your own policy, then CQC obviously is a really good starting point. Look at what they want. You can also, if you just do a search online, you can see other providers' policies. So that's quite good to have a look at those. Cleva Card is a fantastic resource to use. So clearly that's going to be something that people could put in place quite simply to manage things. I mentioned Xero earlier. Depending on what software people are using for reconciling their bank accounts, if you can do that daily, although people may say it's 2 hours a month I'm spending, you'll save that time if you can get into the habit of reconciling daily money that comes in and allocating it to a specific client. That's all a client account is with solicitors. It is simply a separate account, but there is a duty to, within a certain number of hours of it coming into the account, earmark it for those clients. So it's, I think, just about education, asking the questions. There's fantastic resources here. Obviously, I run a company that manages client monies for them. So I'm a resource. Cleva is a resource. You've got Virgin Money on here as well. There's lots of resources here. Also, speaking with your own bank manager, going in, having a meeting and saying, what can you do for me? This is the situation I've got. What would you suggest? And having those conversations, because the more we talk about it, the more the banks are aware that this is a need and they can help.
Some banks are perhaps less enlightened when it comes to this stuff. So you're absolutely right. Let's get out there and talk to our banks. Sarah, just to throw a quick question to you, as someone who previously worked in a membership organisation, our membership organisation someone that a care organisation could turn to ask for advice?
Absolutely. I mean, the Home Care Association itself will have a whole range of resources, and their policy team will be available to speak with. I'm sure the similar would be with Care England and a whole range of other sort of local associations. If you belong to them, reach out to them. That's what you pay your membership fee for. Get them to raise the issue themselves with the bank. They could do a campaign themselves in terms of the association. Absolutely a bigger voice in numbers. So speak to your local associations.
Aidan, I'm going to chuck a question over to you, please, around bank accounts. One question came up and said, does this mean that Cleva replaces, and we're using Cleva here as a shorthand for any sort of client fund management system, does this mean it replaces all of my clients' bank accounts? Will my mum no longer have a bank account?
Mum would keep her bank account, and that might be managed by mum, might be managed by a deputy, be managed by you as the daughter or the son if you're the appointee. So that stays the same. We're talking specifically about the money that is then going via that care provider. And if it's a better system, like we're seeing with direct payment organisations, if it's a better system for that to go via a bespoke account number and sort code, then great. And it also goes back to what we've said about the efficiency of the moving of this money. It shouldn't be a dump into a care organisation. It should be money when it's needed, moving through to the person that it's due to. So no, it wouldn't replace that.
Although that brings me to a kind of another question that came up, which said, what about clients with more capacity? A lot of the stuff we've talked about today has been focused around clients with little capacity. So someone with severe disabilities, for example, whose spending is managed, monitored, controlled by a deputy, a support worker, carer, some combination of all of the above. What about someone who has more capacity? Say someone with autism who's living semi-independently. Emily, you might be the right person to talk to on this one. In that situation, how much freedom and responsibility should we be giving to those clients?
Yeah, I mean, ultimately, we want to be giving people as much independence as possible, because all the studies show that the more independence you give someone, the better their outcome is. So I think it's really important that you don't take that away from clients. That's why we enjoy using Cleva, because the client has a card and the carer can have a card. So they've both got access, but without taking it away. Some of the high street banks will only let an attorney manage an account if they take away the client's right to manage that account. And I strongly disagree with that. I think it's vital that where the client has capacity, if they need support with the finance, then they should have support in place, but not take away their access. So I'm in battle with some of the high street banks over this, but I feel quite strongly that where possible, clients should have that freedom. But obviously, sometimes they need safeguarding. They've still got capacity, but they are vulnerable. So in that situation, something like a Cleva card, where there's a limit to how much could be taken out, is putting in measures, but still allowing them that freedom. We have a client with a gambling addiction. We don't stop her from gambling because she loves it. It's what she really enjoys. But because of her learning difficulties, she doesn't know how to limit that. So we give her a set amount 3 times a week. It's only £10. She goes, she has a great time at the local arcade. She absolutely loves it. We haven't taken away her freedoms or her independence. We've just put in measures to safeguard her. And I think that's really important.
How do you document that, Emily? Just from a sort of bank account perspective, that would be interesting.
So she has a Cleva card. She uses that with her Cleva card. We are in discussion with her family, and they're very happy for her to have that freedom. We're also in contact with her support worker at the social services and stuff. So that's something that we've put together as a best interest decision for her. And it's all documented. Obviously, we can see what she's doing. Actually, she will put money back in when she's had a win. She's really proud of the fact that she can put cash in, and then she'll save it up for something. So it's really quite sweet.
Echoes of my grandmother, who if we'd taken away her right to nip down the bookies once a week and put something on the horses, would have been heartbroken. And that's an important principle there, Emily, I think, which is guided independence is what we call it at Cleva, providing people with as much independence as possible, but in a safe, protected manner. Quickly, the last question. Nearest ATM charges £3.99. Yes, see if we are residents to withdraw cash. This is one of the biggest issues we're seeing at the moment. As ATMs become rarer and rarer, the fees for using ATMs are increasing. It's why we tend to recommend that people avoid using cash and ATMs in general, wherever possible, try and pay with card. Obviously, you remove the fees associated with using an ATM, but also B, you keep that audit trail so you can see how a card has been spent and what the money's been spent on. Of course, as soon as someone takes out cash, that audit trail is gone. We've talked about what we mean when we say client funds, and we've learned where these come from, and crucially how easy it is to mix them if we're not careful. Derek has spoken very eloquently about the risks and the consequences of mixing these funds, and Emily's spoken about the best practice for managing those monies. And the importance of clear policies and transparencies. And we've talked about a couple of practical scenarios and challenges we've come up. and our wonderful panelists have talked about some tips and tools and resources for helping you manage your client funds. I think all that remains really is for me to thank our panelists, Aidan and Sarah. Thank you so much. Our guests, Derek, Catherine, Emily, thank you all so much for bringing your expertise and experience today. We greatly appreciate it. And thank you to our audience for joining us today. We hope you found it useful. If you have any follow-up questions, if you have any anything that you didn't think was answered today, please feel free to reach out to any member of the Cleva team. If you need a bank account, go and talk to Virgin Money. They're awesome. And of course, if you need deputy support, Emily and her team are always available for you as well. Thank you all so much. Have a great day. Thank you.